insights and the news shaping the markets. For that, we welcome in Cinthia Murphy is with us, investment strategist, TMX Verify. Thank you so much for being with us. Very interesting to see the market sell off and then people are buying the dips. Is that sort of the mentality these days of buy the dips? Because we've had a lot of dips.
Yeah, hi Nicole. It's been quite the year so far, quite the roller coaster ride. From the ETF perspective, which is it's the universe where I swim in. If you look at February flows, massive. If you look year to date flows, massive. Like more than $200 billion have gone into ETFs so far in 2025, which if it keeps on pace is going to be another massive record year for flows. So it tells you that markets have been really challenging. We've seen a lot of downside action, and yet investors are putting that money to work. They're trying to find ways to invest in this environment and find where the opportunities are as we watch some of our favorite leaders become laggards this year. So it's been really interesting to see that appetite for positioning is still strong. It's just not in the places we kind of have seen the action in last year.
When we think about the different sectors and what could work, I mean, we have the tariffs sort of as the overhang and the uncertainty. What do you tell investors at this point now with the strategy? Do you have a hedge? Do you have sort of favorite areas, for example?
So what we've seen is like, I like to think of this year as being the year of bubble wrapping your portfolio. So we went from really aggressive risk taking in the last couple of years to this year, it's all about defensive positioning. So, to Jenny's point earlier, Marvell's earnings just showcase the fragility of the tech sector because valuations are so high. We put so much stock into that bullish run that it's not entirely surprising to see that take back a little bit. And the tech sector has seen outflows on the ETF space. We have seen that weakening there. But we're seeing opportunities everywhere. We're seeing people put money to work. They're searching for income. Income is kind of a defensive positioning, and we're seeing that appetite both in dividends, equities that are paying great dividends or growing dividends. We're also seeing in equity income, in options income, derivatives type of strategies, all of those spaces, that defensive type of play, income, guaranteeing type of plays are gaining momentum. We're seeing defined outcomes, managed floor type of ETFs, all gaining momentum here. So it's all about keeping that equity exposure on, but minimizing a little bit of your risk by choosing these other parts of the market.
Okay, so at this point now, ETF trends, I mean, people love ETFs. There's no doubt. We saw inflows over the years as they became available to folks. What do you think the ETF trends now will be in 2025? And do you have a strategy there?
Yeah, so I think it really depends on what you're trying to achieve. So if you think about how big the momentum had been on growth stocks, so far this year, we're seeing value ETFs attract as much assets and really narrow that gap as growth stocks. So we're seeing a refocus on valuations. Where are the attractive valuations? There's opportunity there. We're seeing a more appetite for international equities, which, they're cheap relative to US equities. There's some appetite there. Even within the technology and AI theme, what's been really interesting to see is that broadening of the theme. So the biggest leaders, your Mag 7, your companies, the semiconductor stocks, they have taken a step back. But if you look at the theme as a whole, there's more winners than losers right now in AI. So there's a lot of broader AI portfolios like THNQ, for example, funds that are, offering a broader exposure to this AI story. They're still doing well. It's just that the leaders have changed a little bit. So you just have to be a little bit more careful about where you're putting that risk position and doing a little bit more due diligence.
I mean, you did, right, you made the point that you don't want folks to be concentrated in one area too much. But having some AI or having some tech is okay. I mean, large cap growth.
Yeah, 100%. I mean, I think we've learned historically looking at the performance of markets, you want to stay invested. You just want to make sure you're diversified. If you're worried about uncertainty, if you're worried about a pickup in volatility, things we're seeing, if you're really concentrated on a handful of stocks, your downside risk is much more severe than if you're broadly diversified. And I think that's why we're seeing like the flows into ETFs. We've seen a lot of flows go into commodities. We've seen it go into gold. Almost $7 billion went into gold ETFs since February. That's huge. So it's all just diversifying that exposure. So parts of your portfolio are always working, even if other parts are correcting.
So, with all the uncertainty, so there are certain things working, and I think about earnings, and, a lot of companies are giving us sort of cautionary guidance, but the fundamentals and the earnings, theoretically, are supposed to keep everything afloat, keep the economy afloat, keep these companies running. What do you foresee going forward as far as the economy and the success of companies' earnings going forward?
Yeah, so if we look at this latest earnings season, which we're almost done with, S&P 500 earnings I think are above 18%, which is really strong from a historical perspective. We have seen a lot of great earnings reports this year, so the economy is doing okay. But we also have seen that consumer sentiment is showing some cracks. We are seeing concerns about inflation, the whole tariffs conversation. There's so much we don't know of what happens next. So it's just a matter of we're going to have to give it some time and see how things shake up on the policy front, on all the trade, conversations, and see how different industries get impacted. So it's really a time for uncertainty. It's really a time for, higher volatility. So if you want to sleep well at night, the best thing you can do is stay invested, but just make sure you're properly diversified so you can kind of weather any storm.
Yeah, understood. Cinthia Murphy, TMX Verify. Thank you, Cinthia. Good to see you. Thanks for being here today.